Now to our second big fish from the Sohn Hearts and Minds Conference.
Rob Kapito is co-founder of the $10 trillion fund manager BlackRock. And in this crazy world of low interest rates and heady stock markets, we find him remarkably upbeat about investment and his long-term strategies. Rob Kapito, it's great to have you in Sydney again.
Thank you.
You look after so much money around the world. You have eyes on all this. I just love your take on these extraordinary times, the highs of Wall Street at the moment, and this extraordinary monetary journey we're on.
Well, I think we're always in extraordinary times. The markets are volatile, but in fact, if you look over the last couple of years, they've had less volatility than they usually do. I think we're bombarded by data, so people don't know how to organize their thoughts on the markets, but we're very positive on the market. For a little bit of a different reason than most people will hear. Ours is that companies have been buying back their stock now for many years and raising dividends. They don't have to invest as much in the future as they did before because of technology. But what it does is it actually takes stock out of the market, and it's not being replaced by IPOs. So equities have always led the market. There's not enough equities to buy. So the markets are going higher in a sense because of technical reasons. There's not enough equity to buy.
So supply demand.
So I wouldn't be afraid of the multiples here, and I think the markets are going to go higher. On the bond side of the market, remember, the central banks have been buying a lot of bonds, and they've taken out all the higher yielding bonds and all the duration. So we're left with very short-term bonds that have very low yields. And there's a lot of cash that's still in the system. So I think equity markets continue to rise, and I think rates remain lower for longer.
Markets, from an outsider like me, appeared very fickle this year, particularly thinking about the impact of US-China trade tensions. We've got a US election coming up. Can these markets survive, for example, an Elizabeth Warren presidency?
Well, I've been doing this for 31 years. It seems the markets have survived a lot of political tension. And in fact, there's always an issue in some country. There's always a company that's not stable. If you go back and look at the front page of the paper, the business section for the last 20 years, you'll find there's always something going on. What we believe is that you have to have a long-term view on the markets, because it's not timing the market, it's time in the market. And that's how we invest at BlackRock.
You talk about a lot of privatization, I guess, of companies. I mean, there are industry funds here, for example, who now have a mandate to take a couple of our big companies off the board every year, fewer floats. What does this mean for retail investors, do you think? Do you think retail investors, their time is, they should be thinking about other things than the stock market?
Well, I think they're going to need more professional advice in order to get into these markets. It is very difficult to be a public company today with all the rules and regulations, and while you want to make good long-term investments at a company, you're evaluated quarterly. That is a problem in trying to manage a company for long-term growth. So because of all of the liquidity in the market, there is a very large demand from private equity firms to take companies private and be able to grow those companies in a way that gives you a bit of an advantage right now over public companies. It is going to be a problem because we would like more transparency. And because of the rules, the regulations, the evaluations, it makes it very difficult to want to give that transparency. So it's not necessarily a long-term positive for the market not to have more public companies that have that transparency. But for the individual investor, in order to invest, I do think you need more professional advice in the type of funds or wrappers that they can invest in that have diversification, that have some liquidity that they need, and have somebody overseeing that on a day-to-day basis.
Now, it's always interested me how involved BlackRock is in Australia. I'd love your view post the Royal Commission, which has obviously impacted retail funds here. as to what sort of market, who the big players are going to be in funds management in Australia in years to come, and what will drive that?
Well, I hope BlackRock is going to be a large player. We have over $70 billion of assets today in the markets, a very large office here of over 170 people that we look to grow. This is a very important investment part of the world. It should be in everyone's portfolio, so we intend to continue to build. And I think some of our larger competitors are going to get larger because it's going to be very difficult without scale and size to actually get a return and have an impact on the market for their clients.
So you see BlackRock's, the Vanguards, maybe the industry super funds really taking over the space?
Well, it's not a takeover. It's just that there are companies that offer the scale and size that have the ability to garner excess returns in the marketplace. It doesn't matter that, it doesn't mean the smaller scale firms are not going to have an opportunity to be successful. But I do think the scale and size is important when it comes to index type products, when it comes to ETF type products. I think having the scale and size and liquidity is going to be an advantage to also source a lot of the assets that clients are going to need to outperform.
Larry Fink was one of the signatories earlier this year on the US Business Council's agreement that shareholder primacy's days might be numbered, and that there are other stakeholders which should have equal consideration on boards. Why did you sign up to this, and how far do you push this with boards of businesses around the world?
Well, we believe diversity on a board is very important. We also believe that companies should have a purpose. And so we're trying to create the dialogue. Remember, as an asset management company, I have to manage money on behalf of our clients and what their guidelines are and expectations. So it's not always what I particularly want to do relative to what our clients expect of us. So in order to move the needle, we need to get the dialogue going. Diversity, ESG, what is the company's purpose, not only in shareholder value, but to the broader community. So that's how we're trying to make an impression on not only our clients, but also on companies that we might invest in the future.
And do you see business leaders responding differently to this sort of pressure from investors?
Yes, and it's not only because of the pressure, it's just raising the dialogue. Most of the CEOs of these companies want to do something better for the community. They want to have a purpose. They want diversity. The boards expect that of them now. So I think we're having an impact, but that's how you move the dial. It's not just going to be on a vote yes or a vote no. We have to change the dialogue and change the way that people are thinking. And I'm very optimistic about it.
You seem from our talk pretty optimistic generally on markets. Now, of course, you're a long-term thinker, but you don't see a recession around the corner.
Absolutely not. I think companies are doing well. I see it reflected in earnings in many parts of the world. I see it in low unemployment. So I'm very positive. And also, I believe that a lot of technology is actually kicking in now. All the things we talked about, the efficiency that companies are able to get, a lot of that is coming right down to the bottom line. So I think the time to invest is now, and I'm very optimistic across the globe.
Rob Kapito, so interesting to get all your insights. Thank you very much.
Thank you.